Smart FX. Okay, in this particular video we'll be talking about more on order blocks. So, and I'll make using another example on order blocks and order block plus liquidity actually. So if you look at this particular video here, the one I dropped last week, order block plus liquidity, the beginner friendly SMC guide. And if you look at, I talked about something in that video. I talked about the XAUUSD. That particular trade, it's the take profit just last week. Yeah, this last week. Okay, let me. You can see it here. So this is XAUUSD buy limit. You can see the take profit zones. Market get to the take profit zones, and that's 8%. So let's this particular video here, we talked about it. Let me show you on the chart. So you can see it here on the chart here, how market get there. That's 9% and 197 pips. So that's how efficient some other blocks is. So that's it. I just want to show you the end product of it, so you guys can see, because last week it was around somewhere here. That's 5%. It was around somewhere here, and you can see it here. We have Monday, Tuesday, Wednesday, Thursday, Friday take profit. So, and that also gives us an understanding that market can give you so much beyond your take profits. Because if I would like, let me just take out the take profit, 5% is okay. You can see how market still expand, and I know the market is going to still expand to somewhere around here. So we should not just limit our take profit. We should always know that market can give us so much, because an environment where it is not where it has a lot. It's an environment that does not has a bound. You can make so much and you can lose so much. It's an environment that does not have a bound. And it's an environment that does not have a unlimited environment. Yes. So some people will have just take profit around here. Oh, let me just take out my 2%. Some people have, let me just take out 5%. But guess what? Market is still going. If you know where market is going to go to by knowing the target, you can actually have more. Okay. So let's go to this gold here. You want to look at gold order block that happens last week. Yeah, even though I also missed it, because I was not actually aware. But when I saw it, it was past, my market has actually moved past that level. So I just want to look at it in the chart. So you can see last week was actually somehow like market. That's Monday, Tuesday, Wednesday, Thursday. Market actually traded in a zone, in a range. Market traded in a range, right? So, but at this particular range, there is still something we can look out for. You can see market took out the liquidity here, even though that is the liquidity I've been talking about for past few weeks. Oh, market is going to come back. Market is going to come to this high here, took out the liquidity. And market actually did on Monday, and we have a fair value gap here on that. So these two things actually align now. Like, okay, we can expect more buy to the upside, right? But when I go to, let me go to, so this is the other fair value gap zone on daily charts. Yeah, you can expect more buys, right? So, but I saw it on 30 minutes. So the main market enter into the fair value gap. Don't forget, we have higher time frame zones that we are looking up to, right? Higher time frame zone looking up to. So the main market enter into this fair value gap here. I begin to look for my entry patterns. Even though I look for my entry patterns on 15 minutes. And let me tell you, I have to be so clear with you guys. The reason why I missed this trade is because I was looking at the 15 minutes for entry. If you look at the 15 minutes, there is no fair value gap, even though there are some other entry patterns, but there's no other blocks. There's no other block I'm actually seeing, or there's no other blocks, and there is no what's it called? There is no reclaim order block. So I was not seeing it on 15 minutes. It was not really clear. I was not seeing it. The one I saw, market did not come back there, and this particular one here, and I don't know, market can still come back there in this coming week. I saw one here. So market can still come back there and just become a buy like this. Yes. So That's just it. But that's not the one I saw. So the particular one here is on the 30 minutes. It was after market move a little bit. I was like, what did market moves from this particular place? Then I saw it on 30 minutes. Now it is always good to have those 15 minutes time frames line. Then when you don't see, check other time frames to see. So what is it here? Don't forget, I'm expecting a buy here on daily chart. Why? This is a fair value gap zone and also a fair value area zones, right? So here you can see it here. Let me just draw it the other blocks out again so that people that are just watching this video as a first video can actually understand. So here we have market took out the liquidity here on this particular zone here. So before market breaking this high, market enter into market close an imbalance. The market break this zone. So at this particular zone market breaks here, we have a what market structure breaking. So this last block here is our other block, and majorly the middle of the block is our target, so our entry point. So which means that market before market break this high, after market take out this liquidity, before market break this high, market close an imbalance. This thing that happens here, this little scenario that happens here, is what validates the other block. That is the thing that validates the other block. So which means if this thing does not happen, this other block is not validated. If market enter into a close and imbalance before breaking the structure, that's it. Okay, thank you. So now here market took out the liquidity at this particular low. So we can see that before market break this high, before market break the high, you can see that at this particular level here, we have what? Market close and imbalance. I hope you can see it. Market close and imbalance. This swing low here is what we call the inducement, and that's very, very important. So before market breaking the structure. So which means here we have what? This block here. The way market break this structure, break this high, this block here is what we call an order block. So the expectation is that oh, market should come back there, and this low here is an inducement. So don't forget I said the middle of the block, and if you want to, you can be like, oh, the middle of the block is just it's just lock, right? Market just come there, right? Let us check the other one. Now you can see this odd USD also, even though I use the open of the block, the open, but you can see here the middle should have been the most important place to use. But most time I always tell people, oh, if you don't want to miss the trade, just if you have kind of scenario like this, just use the low of this swing point, the low of the inducement, instead of going to the middle. If you don't want to miss it, just use the low of this swing point, because you know market is going to take out the liquidity actually. So and where is our draw on liquidity? This high. You can see that will have been the most sweetest buy for last week, but eventually I actually missed it. I'm sorry for you guys. And okay, next week we are going to stay up and see. Even the same scenarios happen here also. You know, after market entering into the order block, you can see market took out the liquidity here, and before market break the structure, you can see that market enter into a fair value gap. Market close an imbalance here, so which means that this whole candle, the middle of the candle, you can see the middle is another buy entry. Is another buy entry. So you can see it here. That's just it. That just is simple, right? No, it's not simple, but it's actually okay and very fine. And if you just study it, it's just the ability to see them. And most time I know that it can be so tricky, but just see them. So don't forget to like, share, and subscribe. See you in the next video. Thank you.